Hello and welcome to this week's economic update. My name is Lindy and today is August 16th, 2023. We're going to go ahead and get started with the Consumer Price Index. Now remember, the Consumer Price Index, or the CPI, is a measure of the average change over time in the prices paid by urban consumers for a market basket of consumer goods and services. So in essence, it's what you and I pay for groceries, what you and I pay to get our oil changed, things like that. So the CPI, there is all-in items, and then there are all-in items less food and energy. The Fed looks at the core, which is less food and energy, the core CPI, because they feel like that monetary policy can't impact food and energy. So they take a look at that core reading more so than the all-in reading. So both of them were very minor in movement. So we went up on the all-in reading from 3 to 3.2, and on the core slightly down from 4.8 to 4.7. Importantly for all of you investors out there are the July rents, which increased only 0.4%. Year over year, we're up 8%, which is down from 8.3% last month. So we're seeing a slight slowdown in the amount of increase in rent. The next thing is the PPI, the Producer Price Index. So again, what does the producer pay for the supplies that they need for their warehouse or the food they need for their restaurant? So there's the final demand for goods and the final demand for services. As you can see, both were slightly up, but still at a much lower rate than they have been in a very long time. Food prices rose within this report 0.5%. Heard on the streets for the week, notes from the Fed meetings will be released this week, and we are looking for any hint at another hike or pause. There's no Fed meeting in August. Any jobs data will be important, and the Fed is paying special attention to that. Retail sales were up 0.7% in July, higher than expectations. Student loan payments that have been deferred for the past few years because of COVID are scheduled to start again October 1. So all those students that have not been making their loan payments because they were deferred, I see student loan payments ranging anywhere from $40 to $1,000 a month. Those will start, those are starting due again October 1. Credit card debt reached an all-time high, reaching $1 trillion for the first time. That is a big number. Credit card rates now range between 21 and 25%, and delinquency rates are now at the highest in the past 5 years. Shocker, right? The conventional weekly mortgage rates, we went slightly up from 7.09 on a 30-year Fannie or Freddie conventional mortgage for owner-occupant primary residence, from 7.09 up to 7.16. So still kind of on that upward path. The DSCR, or the debt service coverage ratio, 30-year fixed rates, are still in the same range, somewhere between 7 and 10%, and that depends on your credit, the loan to value, and your DSCR calculation.